Let's dive deeper into today's action with our markets reporters. Let's look beneath the index numbers. Abigail, what are you watching?
You know, I'm taking a look at that Russell 2000 that you were just looking at, underperforming at the lows on pace for its worst day in a month. At the close, the worst day of the month. Here's a chart we've been looking at for quite some time. It actually initially came to us from Ari Wald of Oppenheimer. At that time, Ari was making the case months ago that if the Russell 2000 could pierce above 1600, that would be a bullish sign. Well, we see that for all of this year, after the big fall last year, that we've been below that 1600 level, although yesterday we did go right above it on a slightly rising 200-day moving average, but the RSI is now going back down into the range from oversold. It's going to be interesting to see whether or not the bulls here can pick it up, Taylor, and bring the Russell 2000 closer to its all-time high, but it has outperformed more recently, up about 10% relative to the S&P 500, up about 7%. So we may continue to see a little bit of a cooling off here for small cap, Taylor.
Well, Abigail, I'm taking a look at shares of Qualcomm, and it looks like a small beat on both the top and the bottom line, with revenue and adjusted earnings per share for the fiscal fourth quarter coming in most better than what analysts had expected. And this was okay. Morgan Stanley in particular was coming out and saying that the fourth quarter seemed appropriate, but he's been cautious really on first quarter. It is that next quarter that looked a little bit too optimistic for him. So I'm waiting to get some more details on guidance as we look ahead to the next quarter. One issue we're also taking a look at is if you want to come and take a look at a chart I'm showing here inside my terminal, it is all about those gross margins. So for Qualcomm, that is the white bar. Last quarter gross margins were about 58%. Analysts here were looking for that to decline a little bit to about 57.8%. Again, this would be the fifth year of perhaps of declining sales and earnings per share for the full year. We have to get some more details again about the 5G ramp up. Analysts say that if we do not get that it will be significantly weaker. Investors will be disappointed. So all eyes at least today here on Qualcomm. Bernita.
Thanks, Taylor. I'm taking a look at shares of Nu Skin, which have fallen as low as 17% after its earnings per share and revenue trailed analysts' estimates, with the CEO, Rich Wood, citing regulatory environment in mainland China as one of the main things that made stocks go the way that they did today and the earnings go the way that they did in the latest quarter. And that's pretty much why Citibank cut Nu Skin to neutral, and the stock has declined about 35% or so over the year. And Citi is saying that the company is likely to face pressure in some markets outside of mainland China into 2020, despite the product innovation that should actually aid in the business.